Hi, everybody, here in the room and out in the world of agent owned. I'm Wally Burbage with Allstate Insurance Services, one of your sister companies. We also have in the room Terry Murphy with Alliance Insurance Services. That's your independent insurance agency affiliated with agent owned. A quick commercial. You get. My dad always said you get nothing for free. So this is free to y'all. Let me get out and do a commercial real quick. Allstate is back in the homeowners business. We were out of the business with Allstate for about 6 years, and as of February 11th, we're back in the homeowners business. So please send us your buyers. We've got a lot of great products besides Allstate. We've got 5 other companies. If we can't make a match with your client, then we can find something with Terry and vice versa. So we really have products for any of your situations. So please let your clients know about us, and we'd love to talk to them. We'll be talking about changes going on with flood policies. Now, everything I talk about, I'm going to disassociate with an insurance company because this is FEMA. All right, this is the federal agency. The insurance didn't come up with this. Your government has come up with this. We're just going to provide that information to you. Don't hold me accountable for these changes and these things that you don't like. But it's based on the changes made by FEMA. We're going to start out with kind of the big picture information. There's going to be a lot of information. And you're going to have a lot of questions in the beginning probably. But please hold on because we're going to go down and kind of the micro and get more information as we get further in the presentation. So it's going to answer a lot of questions, a lot of specifics. There will be questions that we can't answer because, quite frankly, FEMA can't answer them yet. It's so new that we're talking to FEMA people and they're saying, we don't know yet. So we're going to give you as much information as we can. You have questions that we can't answer, we're going to go with these people, try to get answers for you, but we do have a lot of information to share with you. And so I'm going to ask you please to hold all the questions till the end, either online or here in the room, because there's a lot of information throughout the presentation. All right, I'm going to go through the slideshow first. The bigger, does anyone know how to say that yet? Bigger waters? Okay, we're going to go with bigger waters at. We think this is two senators from Oklahoma who don't have any floods. Because these are all about rate increases on flood, so they're probably not affected. All right, good. Okay. In 2012, Congress passed an act because, quite frankly, flood, FEMA was going broke with the National Flood Insurance Plan. So they saw that they were having to pour more money into it. The rates weren't actually being brought in fast enough to pay our claims. So the federal government has had to subsidize flood for quite a while now, ever since Katrina, and it's gotten worse. A lot of small storms have happened since Katrina to cause some of this. But what they're trying to do is make the rates adequate for risk. There's been a lot of changes globally that have changed our weather patterns that we all know about, and that's part of the problem with this. Is that we're using old rates based on old risk. There's been a lot of map updates, and we'll talk about that in a minute. And the data has changed, and they've updated the risk. Some of you personally may have seen this. Some of your clients may have seen the rate risk changes, and that's going to be affected in this also. Buying and selling property is going to affect how some of these changes in this act affect your client's price. Both people that have policies now and people that get buying houses, and possibly having a title change in a house. Rates for most properties will be more accurately reflecting their risks based on the current data and the history that we've had. Subsidized rates for non-primary residents are being phased out. What that means is grandfathering for houses that were built prior to January 1st of 1974. So the old grandfathering things that we have, they're going to eliminate that on non-primary residences immediately. Okay, so it means it's not the house that you live in, investment property, secondary houses, things like that. Subsidizes will be limited over time for new policies sold after July 6, 2012, to cover previously uninsured property. Purchases of property allowing policies to lapse. If somebody's policy lapses and they have to get a new policy, that grandfathering will not be there. They'll have to go based on what the rate is today. not the pre-firm rate. Let me back up for a second, talk about pre-firm and post-firm. Pre-firm are houses, again, built before January 1st of 1974. So, okay, that's probably you, everybody, and all your neighbors. Most people in the village, you guys know your community very well, you know when the houses were built. So in the past, because there was no flood plan out there were no rules saying that you had to build a house a certain height. They just used common sense back then. So there was no flood plan. They didn't penalize people for having houses that are below the floodplain. Because as we know, below the floodplain is the highest risk. You want to be at or above the floodplain to reduce your risk of a flood. So what they've done in the past is they've allowed them to have a special grandfather. So they would not give them the full rates that the current prices would charge. Okay, so that's pre-firm. Post-firm is everything built after 1974. Okay, so when communities adopt the new flood maps, discounts like grandfather will be phased out. So they're eventually going to phase them out altogether, but they're going to do it gradually. It's expected in 2014. Again, I talked about wet patterns, erosion, development. We're developing properties in crazy places, quite frankly, right on the water, right over the water, right in the middle of the marsh, things like that. And these are some of the reasons that we have these rate increases coming into effect. They say they have better science and tools to predict floods and bad weather, and so they know more of the risks. Not everyone, only 20% of the flood plan policies receive subsidies, and even a smaller number will see immediate rate changes. Owners of, again, non-primary residences in a special flood hazard area, that's a mandatory flood zone. Okay, you see special flood hazard area, that means mandatory flood zone. We'll see a 25% rate increase annually until rates reflect the true risk. That began on January 1st, 2013. What does that? That's on pre-firm, okay? But the non-primary resident, okay? Well, y'all are probably going to ask or want to ask what will be the true risk rate? They don't know. We don't know, so they don't know. It's a scary proposition, I know, but more information to follow. Owners of subsidized properties that have experienced severe repetitive losses may have those rates immediately into effect. They incur flood cumulative damage with flood insurance payments exceeding the value of the structure. We'll see a 25% rate increase annually until, again, rates will reflect true risks, beginning in late 2013. Owners of subsidized business properties in a mandatory flood zone will receive a 25% rate increase annually, again, until the rates reflect the risks. And owners of substantially damaged or substantially improved subsidized property will see a 25% rate increase. When they say subsidized property, that's a pre-firm. Okay, everything built prior to 1974. Okay. Owners of primary residences. You'll be able to keep your subsidized rates until you sell your property. New rates will then be charged to the new owner. That's big. That's a big thing you guys got to know when you're selling property. That's huge. Okay. The question here in the room is: can real estate agents see what the rates will be? Yeah, you're going to need to. It's going to be. So the benefit of everybody online, the question was, should I check out what my rate is going to be? I'm selling my house, and I check out what my flood rate is going to be. The question, again, back to the asker was, when was your house built? She said it was 2004. So it doesn't affect. It's not an effect. We're talking about houses built prior to 1974. Okay, but if you have a house in the pre-firm prior to 1974, when you sell your house, or you have a buyer, you're going around with a buyer, and they're going to buy a house that is built prior to 1974. Their qualification may be different for their loan, maybe a big difference. So you'll need to take that into effect and get a rate before maybe make an offer on the house. Maybe a good idea, and we can do that for you. The new rate is going to be based on the current rates, not the subsidized rates. The problem with that, the rates being rated on the current prices are that they take into account the height of the building. So before they were grandfathering saying, well, we're not going to penalize you as much as it would be if it was the same house built today, okay? Because it's too low. So the rates are going to be, I'm going to say, a good bit higher than they are being grandfathered. So it's going to affect a lot of buyers. The question in the room is, have they redrawn lines? Yes, they have. Yeah, I personally think the question in the room is, are you going to have an elevation certificate to get a quote on every property now? And I'm going to say it's probably very likely that you're going to have one. And we're looking at, what's the rate going today? About $300? About $300, $350 a day for every elevation certificate. Okay, let me get back to owners of primary residences. You'll be able to keep your subsidized rates unless you sell your property, unless you allow your property, your policy to lapse. You suffer severe repeated flood losses. And what does that mean? Well, I don't know. That's up for interpretation, I guess, by FEMA. But if you have a lot of losses, they're going to drop you from the preferred rate. Or you purchase a new policy after July 6, 2012. Okay. Changes underway. Forced rates will be applied to property not previously insured, newly purchased, or to a policy that has been repurchased after a lapse. Premiums for older pre-firm, non-primary residences in the mandatory flood zone will increase 25% a year. We talked about that. Later in 2013, premiums for pre-firm residences or business properties and severe repetitive loss properties, residences 1 to 4 households, and properties where claims payments exceed fair market values will immediately receive the 25%. Normal rate revisions will occur annually, and increases will include a 5% assessment to build a catastrophe fund, a reserve fund. So they're trying to build up a reserve fund in case of a big storm, big loss in the big area. Late 2014, premiums for properties affected by MAP rate changes will increase over 5 years at a rate of 20% per year until full rates are reached. What's the question?
Is that still in South Carolina or?
No, this is nationwide.
Nationwide.
Yeah, in the flood zone, nationwide. Stokes, okay, just here, yep. Can you touch it? No, I'm just kidding. You did! Hold on, we went too far. Okay, I'm sorry, let me back up. Now my head's in the way. This video. I will do much better with the end. Yeah. We've already covered that. Yep, here we are. They're going to talk a little bit here about, the history of the National Flood Insurance Program. It was developed in 1968 to make affordable insurance available, generally available, because flood damage is not covered by homeowners policies. I hope everybody in this room knows that. So the private market could not, it didn't have viable rates, quite frankly, for flood insurance. So FEMA had to step in so we could continue living in Charleston and have affordable rates. The problem is they just haven't kept up with the times and the risks. Communities adopt and enforce floodplain management. What is that? That's another word for building codes. You'll have building codes in the community to keep the flood rates down. So that helps with flood rates. Structures built before FEMA mapped in the special flood areas are called pre-firm. We talked about that. 45 years after the flood plan was started, flood risks continue. The costs and consequences of flooding are increasing. Artificially low rates and discounts can no longer be sustainable, and Congress passed legislation to make them more fiscally sound over the long term. All right. What can you do? Let's talk about it as a consumer, and you can tell your consumers what to do, but they need to probably get an elevation certificate at some point to make sure that the rate is the best it can be. Sometimes it's a gamble to spend $300 to see if you're going to get a better rate. Kay, for example, in your situation, if you had an elevation certificate and the rate turned went to $3,000, and let's say that today's rate with an elevation certificate would have been $2,500, you'd be better off in the long run. So that's going to be something that we're going to have to work with in those situations. Yes. Yeah, this is brought up a good point. Old elevation certificates do expire. So you need to check the dates on those. You have to get a new one to be eligible to get rated. Yeah. Yeah, the question was how long do the elevation certificates are they good for? We think it's 5 years, but we'll confirm that. Building or rebuilding higher will lower your rate. Again, nobody wants to lift their house. Obviously, that sounds really good on paper, but that's pretty expensive to do, to raise your house, but it will significantly lower your rate. When you're looking at houses with your buyers or for yourself, the higher it is above the floodplain, the cheaper the rate is. That's just a magic thing. I will also throw in here one of my favorite things that I want y'all to be aware of, especially when you use those on the barrier islands, Isle Palms. These structures built underneath elevated houses are a problem, and they're going to be a problem more and more. So be aware of that when you're showing something that has, they built a little studio underneath for a college kid to help subsidize their mortgage. Flood companies are going to rate that from the ground. If they have a structure underneath an elevated building, it's going to be a serious problem when they go try to get a flood policy. So just be aware of that. Unless it's engineered breakaway walls, which I rarely see when I drive around those areas, it's going to be a problem. All right. Kay asked a good question. Can FEMA deny a claim because somebody built a structure underneath and they weren't paying the proper rate? No, they won't. They won't deny it, but they will go back and charge. They will adjust the claim based on the rate it should have been. So if you should have been paying an extra $2,000 a year, they will go back and say, take that amount of money off of the claim that they pay. All right, can I go to the other? I had heard 2 years, but I'm not sure. It was not all the way to the beginning of the policy, like you would think. All right, these are some particulars of some of the rating changes. Some of this is going to be repetitive, but I just want to show you some of the rate changes that are going to affect. Premium increases on average will be about 10% for policies written after October 1, 2013. There is going to be that 5% reserve fund as a part of the rate increases. We talked about the 25% for the pre-firm. There's going to be a policy fee increase, $20 to $22 for preferred risk and $40 to $44 for the mandatory flood zone areas. I want to show you the V zones, the different zones and what they're looking at rate increases. In the V zone, the velocity zones, that's the highest risk. There's going to be an 11% rate increase for the post-firm, so things written, built after 74, and the pre-firm, they're looking at 17% rate increase. A zones, they've broken it down as the types of A zones. There's different risks within the A zones, but post-firm, A1 through A30 and AE zones will get a 6% rate increase. Pre-firm, AE zones will get a 16% rate increase. AO, AH, AOB, AHB, I've never heard of any of those in our area, receive a 6%. Unnumbered A zones, so just an A by itself will receive an 8%. And A99, which I've never seen, or AR zones will receive a 9% rate increase. X zones, not mandatory flood zones, right? Y'all know that. X is not a mandatory flood zone. A's and V's are mandatory flood zones for mortgages. X zones will receive for a standard rated policy 8%. A preferred risk policy, premiums will increase an average of 1%. And this consists of a 19% premium increase for policies written under the preferred eligibility extension. I've never run into that. I don't know how you would qualify for a preferred eligibility extension. I don't think that's in our area. And then less than 1% for all other preferred risk policies. In existing policies. Yeah, that's what we're talking about now, the existing policies. You're an A zone.
Or A zone?
A or B? Okay, you know? A, I think so.
She's going to get a premium increase anyway.
16%. But your buyer's going to get 25 on top of that. It's now. October 1st, 2013. All right, that's stuff we've already covered. And we're gonna have copies of this available in Google Docs. Liz is gonna upload all these documents that you're seeing for those of you who are not in the room. We were gonna talk about the mortgage. There's no longer a 30-day waiting period allowed. If somebody has a house and let's say they had it paid off and they didn't have a flood policy, and now they're going to remortgage to a mortgage, they have to wait 30 days before they can get the flood policy. So that's going to affect people trying to get a mortgage, a new rate or something, or a mortgage, second mortgage, I guess, on their house very quickly. The 30-day waiting exemption is will no longer be in effect. For purposes, yes. Change the title, yes. That doesn't change. But if you have the same title on the house, you don't have flood insurance, and you need to get a flood policy because you've got a loan, you have to wait 30 days. Yeah, that's one of the changes in here. That is pretty much everything that we have covered. We've had a few questions, but be glad to answer any others. Again, there's more information to follow. I know there's a lot of information, and it sounds a little scary, but the advice I want you to walk away from here today is find out, number one, if something you're showing is in a flood zone, and then number two, get a rate before probably you make an offer. Would you suggest that, Liz? Yeah. And we can help you with that. We can tell you, just calling our office, we can tell you what flood zone something is in, unless it's a brand new development that hasn't been mapped yet. But if it's something existing, we can tell you just about on the phone what flood zone it's in. We can't tell you what the price is right away, but if we can get a copy of the elevation certificate, we can give you a good idea what the flood rate's going to be. And our mortgage people need to hear this information too. Yeah, because it's going to affect mortgage people, for qualifying people, I think, for loans. Okay. Yes, Boyd. Yeah, Boyd's comment was that he's suggesting that real estate agents go to people that are professionals in the flood policies, because just asking the buyer or the seller, do you have a flood policy now and how much does it cost, is not the way to do business anymore. Things have changed. So you really need to get a hold of us. I will tell you, my office is, if not the top, one of the top offices in the state for flood, because we've been doing it a long time. We specialize in it, and we try to stay on top of it. It changes all the time, and it's laborious dealing with this FEMA stuff, but we know it's important because we do a lot of business in the low country, and there's a lot of flood. We'd be glad to help you any way we can, anytime. And it's any more complicated, unfortunately. It's not getting easier. Liz asked me just to mention that flood maps have changed. I know a lot of times you go to a listing or something and they say, we're only in an A zone. Well, they may now be in a V zone, and they don't know it because they haven't had to purchase a flood policy lately. So, again, I reiterate, please check before you make an offer, because things may have changed drastically. I've had people go from A's to V's. V's is more severe, but I've had people go the other way too. It's crazy. I give you an example of what is the place on Rockwood Boulevard? Halston Place. Halston Place. They went from an A to they went from a V to an A. That sounds good, right? Here's the problem. They built those based on being in a V zone. They have engineered breakaway walls, okay, which is a good thing, it sounds like. Engineered breakaway walls in case this flood came in, it would knock the walls out, the pins would come out, and the building would stand. That's great. Those don't count when you're in an A zone, because those are built for high velocity. So FEMA says, no, we can't use those vents in an A zone. So we had to have people cut holes in the engineered breakaway walls to be able to be eligible for the best price in an A zone. It's just crazy, but it's FEMA. That's all I can say, it's FEMA. So. Yeah, grandfathering is no longer available. So just everybody keep aware of that. Also, probably y'all haven't asked, but assumptions. We're trying to find out more information on assumptions. Now would be as good a time as any to assume an existing flood policy if you can on an existing property. We have been told, pre-firm there's no assuming policy. But we asked about post-firm, and they said there's nothing so far to say that you can't assume, so that's always a good option. Right. So if you write a new flood policy, it's going to have the 20% rate. How do we check what flood zone is it in? Mortgage companies have access to the databases and insurance companies. You can look on FEMA. You can see the maps. You can't see streets and everything. Just kind of, it's complicated. It's not worth looking at. We actually put the address in, and it tells us exactly what flood zone. We have flood maps. We have hundreds of flood maps, and I'm telling you, you can't tell most of the time because a lot of the streets aren't in there. You can't tell where the house exactly is. And another thing that I talk about in my other flood class is mortgage companies treat flood risk differently because some mortgage companies say, well, if a part of the building itself is in the flood zone, then you have to have a flood policy. Others say if a corner of the lot, not the building, just a corner of the lot that you own is in the flood zone, then you have to have it. So it depends on the mortgage company sometimes. Yeah, Terry pointed out that you can get, I guess, exempted from a flood zone if you prove that your base of your house is above. Yeah, the grade of the house, the grade of the level of the house is above flood zone. I was just in Louisiana last week, and they don't build elevated houses in Louisiana. All of them are slab houses, but you'll see some houses that are built 10 feet, they have a 10-feet mound just around their house. Everything else just slopes off. It's a strange looking thing. I don't know why they don't build elevated houses, but they just build the base higher. And I think that's what they're trying to do is exempt themselves from the flood zones. All right. Well, thank you, everybody, and we will provide this online, and also the documents will be there also. Thank you.